Level 1, the discovery. The chart moves and something clicks in your brain. You don't know what it means yet, but it moves and it goes up, and somewhere in the back of your mind you think, that's money. It's 11 p.m. on a Tuesday. You found this on YouTube. Some guy with a Lamborghini in the thumbnail was talking about pips and spreads, and you didn't understand half of it, but you stayed for the whole video. Then another, 3 more. By 2 a.m., you've opened a demo account. You don't tell anyone. It feels like a secret you're not supposed to have yet. The interface is confusing. Empty 4 candles, the red and green, the little numbers jumping, but you figure it out fast enough to place a trade. EURUSD. You hit buy. The number goes up, 1 or 12. You close it. Made 12 in 4 minutes. It doesn't matter that it's fake money. It felt real. Your hands are slightly warm. You sit back and look at the screen and think, why doesn't everyone do this? That question is going to cost you a lot before you understand the answer. You spend the next 3 weeks learning everything. Moving averages, RSI, and resistance. You find a strategy on a forum, 87% win rate, someone claims, and you screenshot it, save it, print it out. You believe it. You deposit 500, real money. The demo account felt like practice, but this is serious now. You're a trader. That's what you call yourself when you're alone. Your first real trade. You buy GPUSD on a Tuesday morning. You saw a pattern. The line touched a level. You remembered the screenshot. It goes against you immediately. You hold. It'll come back. The guy in the video said to be patient. It doesn't come back. You lose an ADOs in 40 minutes and close the trade because you can't watch the number anymore. You sit very still. You think, I chose the wrong pair. Level 2, the grind. You've lost 300 of your 500 and you've decided you just need more knowledge. Is the belief that will keep you here longer than anything else. Not greed, not stubbornness. The belief that the answer exists, that it's learnable. Someone out there has it written down and you just haven't found the right page yet. You consume everything. Baby Pips, Investopedia, 3 books, the 97 course from someone with a modest YouTube channel who speaks slowly and uses clean slides. You take notes, you learn about risk management properly. This time you learn that professionals risk 1 to 2% per trade. You learn about RTR ratios. You restructure. You make a trading plan in a Google Doc with headers and everything. You deposit another 300. You follow the plan for 4 days. On the 5th day, you see a setup that isn't in the plan, but it looks so obvious. The candle is right there. The pattern is textbook, and you go in with 5% of your account. You lose it in 22 minutes. You don't update the Google Doc. The cycle becomes familiar. Then impulse, then loss, then discipline again. You think the problem is your psychology. You've read that 90% of trading is psychology. You try meditation. You try journaling your trades. You try a checklist before every entry. Sometimes it helps. Often it doesn't. You're not losing because of psychology. Not entirely. You're losing because you're trading patterns that don't have real edge. You just don't know that yet. You can be perfectly calm placing a bad trade. Doesn't fix a flawed system, but you can't see that from here. You find a community, a Discord server with 4,000 members. People share their wins, screenshots of green days, percentage gains, account balances with arrows pointing up. There's a guy who posts every morning with a bias for the day. You start trading his bias, right about 55% of the time. The market is right about 50% of the time. You can't tell the difference. You spend 8 months here. Your account goes from 300 to 180 to 600. You added more to 310. Now after everything, you were down roughly 800 across all deposits. You tell yourself you're still learning. You are, just not what you think. Level 3, the edge. Something shifts around month 10. You stop looking for the Holy Grail. Not because you found it, because you got tired. There's a particular kind of exhaustion that comes from chasing something that keeps moving. One day you just stop running and stand still and look at what's actually in front of you. What's in front of you is price. Just price. Moving, making patterns. To watch it differently. Less reading, more observing. You sit with charts for hours without trading. You're not looking for signals. You're watching behavior. Where does price slow down? Where does it accelerate? Where does it reverse? And does it reverse cleanly or does it chop? You notice things you couldn't see before because you were always looking for confirmation of what you already believed. You build something small, a simple framework, 3 rules, no more. A specific session, specific pairs, a defined risk. You backtest it manually, scrolling through months of data, marking every valid setup. The edge is thin, maybe 55%, maybe 58% win rate with a 1-to-1 5R. It's not glamorous. There's no Lamborghini in this spreadsheet, but it's real. Month trading the framework, you go up 6%. You take 11 trades. You follow the rules on 9 of them. The 2 you didn't follow, both lost. 9 you did follow were up net 6%. You sit with that for a long time. You go up 4% the next month, down 2% the month after, up 9%. This is what consistency looks like. Doesn't feel like what you imagined. It feels quieter, more boring, more like work. You close the Discord server. Not dramatically. You just stop opening it. The noise stopped being useful. You don't need someone else's bias anymore. You have your own framework, and when the setup isn't there, you don't trade. Not trading is the hardest skill you've learned. Your account is at 1,800 now. Real gains documented. You know your expectancy. You know your max drawdown. You know what your system does in trending markets versus ranging markets. You feel for the first time like you're not gambling. You're not right yet about everything. You're less wrong than you've ever been. Level 4 scaling. You're consistent for 6 months. Not perfect. You have losing weeks. Once a losing 2-week stretch that made you question everything you'd built. You went back through every trade, found 2 entries that were slightly off model, adjusted, system held. You add capital, 5,000 total. The percentage gains are the same, but the dollar amounts are different now. A 6% month used to be 18. Now it's 300. You feel the number differently. The losses feel different too. You take a 200 loss and your chest does something. Not panic. You know this trade was valid. The loss was within the model, but something tightens anyway. You sit with it. You don't revenge trade. That's growth. That specifically is growth. You connect with 2 other traders, not from a server, from a small private group, people who are at a similar level. You share journals, not signals. You debate execution, not predictions. The conversation is different here. More technical, more honest. People admit when they were wrong without making it a crisis. Someone says, I took a loss Tuesday because I entered 15 minutes early and missed the confirmation. Here's what I should have waited for. And everyone nods and the conversation moves forward. No one is performing. You realize most of what you consumed in year 1 was performance. The screenshots, the flexes, the 5,000 day posts, that was a product being sold to people at level 1. You don't feel angry about it. You just understand it now. By month 18 of consistent trading, you're managing 1,000. You return 7% that month, or 840 in 1 month from a screen in your apartment. The number is hard to hold. Part of you keeps waiting for it to collapse. It doesn't collapse. The system keeps working. You start thinking about 6 figures, not as fantasy, as a technical problem. What would the execution look like at 100,000? Would the liquidity on your pairs handle it? Would the psychology change? You start doing math. You start planning. You've never planned from a position of evidence before. Different. Level 5, the professional. You're managing 80,000. Some of it is yours. Some is from 2 people who watched your track record for 4 months and asked if you'd trade their capital. You said yes. You set clear terms, percentage split on profits, fine drawdown limit, monthly reporting. Your life has reorganized around the market. You wake up before the London Open. You've stopped drinking because it affects your decision making the next morning. And you've tested this empirically. Sleep 8 hours, not because wellness culture told you to, but because you tracked your trade quality against sleep hours, and the correlation was undeniable. You don't talk about trading at dinner anymore, not because you're secretive, because no one has the context to have the conversation. You tried once with someone close to you explaining what you actually do. They nodded and asked if it was like the stock market. You said, yes, kind of, and moved on. The loneliness of expertise is something you didn't expect. At 80 hours and under management, you're making enough to live on if you're careful. Not lavishly, carefully. 3 months of expenses in cash, not in the market, never in the market. That's a rule. The market is for generating, not storing. You have bad months. A drawdown in April that went to 8% before recovering within your defined limits, but uncomfortable. One of your capital partners calls to ask about it. You walk them through every trade, every decision, every reason. They stay. But the call reminded you you are now accountable to other people's money. That weight doesn't go away. Your edge is tighter now, more refined. You've cut 2 setups that weren't performing and added 1 new one after 6 months of observation. System is leaner. Your execution is cleaner. You sometimes go 3 days without a valid setup. You don't trade. 3 days of watching the market and doing nothing. People at level 1 think trading is constant action. It's mostly waiting. You're good at waiting now. You weren't before. Level 6, the operator. You manage 400 the lows. Capital came over 2 years. Some yours, some from 4 investors. One of them introduced through a lawyer who had another client who'd asked about Forex managers, how it works at this level. Not ads, not YouTube. Introductions through people who have already decided to trust someone adjacent to you. You have systems now, trading systems, operational systems, a monthly report template, a drawdown protocol, a compliance folder because you looked into the regulations and restructured accordingly. You have a part-time assistant who handles the administrative side. You manage 400 in positions before lunch and none of it feels real anymore. That's not a complaint, it's just true. The numbers dissociated somewhere around 150,000. Now they're units. Position says 40,000. You don't feel 40,000. You feel the percentage, the risk, the relationship to your overall exposure. This is useful. This is necessary. If you felt the dollars, you couldn't function. Your personal life is structured around the market the way other people's lives are structured around office hours, except the market doesn't give you weekends off mentally. You're always partially there. A news event on a Saturday pulls your attention. You check your platform even when there's nothing to check. Your friends have stopped asking what you do. They know you trade, stopped expecting you to explain it in a way that connects with them. You have one friend who trades equities at a fund. You talk to him for 2 hours every few months. That conversation is the most normal you feel. Everything else you are translating. You're not unhappy. That's important to say. But you're aware of what the work costs, and you've made the calculation and you've stayed. That's a choice. You know it's a choice. Level 7, the architect. There are 7 people in your operation now. 2 junior analysts, a risk manager you hired away from a small prop firm, a developer who built your order management system, operations manager, an accountant, an investor relations person who handles your 14 capital partners. You manage 2 million. You place most of the trades yourself anymore. You built the system, defined the rules, created the protocols. Your risk manager executes. You review. You approve the framework adjustments. You were the decision layer above the decisions. This took 3 years to build and 6 months to trust. Month you stepped back from direct execution. You watched every trade from a remove and felt the wrong kind of feeling. Not confident oversight, the specific anxiety of someone who has handed the wheel to another person and can't stop reaching for it. You gave it time. You reviewed the outcomes. Execution was clean. You adjusted twice. By month 4, you were reviewing end of day, not tick by tick. That was hard. That was necessary. Your investors are serious people now. A family office, 2 high net worth individuals referred through a private bank relationship, an institution running a small allocation through you as a satellite strategy. These are not people who found you on Instagram. The conversations are different. Talk about sharp ratios, correlation to their existing book, drawdown duration, not just depth. They ask about your succession planning. You have a document for that, not charts anymore. Your day is management, review, decision-making at the system level, strategy, hiring, investor communication. You are running a business. The business generates alpha. You are the person who architects the conditions under which alpha is generated. You miss the chart sometimes. Not often, but sometimes late when everyone is left. You pull up a euro to US dollar chart and just watch it for a while. Not to trade, not to analyze, to remember what it felt like when it was just you and the price and the possibility. You close the chart. You go home. Level 8, the apex. The office is quiet now, not late. It's 3 p.m. on a Wednesday, and you've already finished the only call you had today. Your team handles the operations. Your risk manager runs the floor. You come in for the important things, the investor meetings, the significant decisions, the moments when someone needs the person at the top to be present. You manage directly and indirectly 22 million in client capital. You've stopped saying that number out loud. It doesn't mean what it used to. It's infrastructure now. It's the number that allows the business to function. That pays the 7 salaries and the technology costs and the compliance fees and still produces a return that keeps the investors in the room. You know things about markets now that you cannot fully explain to most people. Not because the knowledge is secret. It's available technically, but because it requires 10,000 hours of context to hold correctly. You've watched the same patterns fail in different ways for different reasons across 7 years of live execution. You understand liquidity at a level that would have meant nothing to you at level 1. You understand that the market is not a code to crack. It's a crowd, a vast continuous aggregate behavior of every participant simultaneously. And your edge is not knowing the answer. It's knowing where the crowd is wrong more often than you're wrong about where the crowd is wrong. That sentence would have confused you once. Your investors trust you completely. And that trust is its own kind of pressure, not heavy, not daily. It sits beneath everything like a foundation. They don't worry because they trust you to worry for them. That means you carry it so they don't have to. You're used to it. You don't talk about work the way you used to. Nothing to prove, no one to convince. The results are in the audited statements, 3 years of them, available to serious inquiries through your compliance team. Lunch alone most days, not from sadness, from preference. The silence is productive. You think better in it. You've thought about what comes next, raising a larger fund or stepping back, licensing the system, writing something down, not for publication, just for yourself. You haven't decided. For now, you sit at the window and watch the city and think about nothing in particular. And somewhere beneath that nothing, a part of your mind is always faintly watching the market. Never fully stops. You stopped fighting that a long time ago. You're in the elevator on the way out when your phone buzzes. A message from your operations manager. A junior analyst on the team, just hired 3 months in, asked a question this morning that you've heard before. Specific question about a specific pattern full of the wrong assumptions, asked with complete confidence. You read it, you remember asking that question. Not the exact words, the exact certainty. You type back walking through it. Don't correct him too fast. Let him see it. You put the phone in your pocket. In a forum somewhere right now, someone just posted a screenshot of a 340 demo profit. They've written, "This is it. I figured it out." The replies are already coming in. Fire emojis. Someone asking for the strategy. Someone saying they've been doing this for years and good luck. Someone who knows better saying nothing. They'll deposit their first 500 this week. They think it's simple. They're wrong, but they'll learn and it will cost them exactly what it cost you. And they'll stay anyway, always do.